Well, thank you everyone for joining this week's Mortgage Matter with Chris. This week we are taking the subject of taxes and we're going to try and make it exciting. So it's all good news for people who are homeowners and people, especially those who have bought this year. So Chris, thank you so much for being here with us. Chris, you and your wife, Julie, have a combined almost 50 years of experience in the mortgage industry. So you have seen it all, and we're very excited to hear from you on this topic, as all these years you have been helping your clients and home buyers through this tax season. So we wanted to kind of put it out there with some tips and things to look for and documents that people might need, because a lot of this stuff, unless you're actually a tax professional, none of this comes natural to any of us. So Chris, thank you so much for being here.
Awesome. Yeah. So this is, an exciting topic for those that were renting prior, because once you buy a home, it opens up a whole plethora of different available write-offs, tax write-offs, which means you get a little bit more money back, which is exciting. So that's another huge advantage of being a homeowner. All right. You get to open up these different opportunities to get some more money back from the money that you're spending. So for example, first off, before I go into the examples, we're going to get to that. We want to talk about what would you need, additional documentation that you need when you're going to prepare your taxes to get some of these other deductions that we're going to talk about to the point of in 1 minute. So
by now, most people have probably received their W-2s, right? And all that normal stuff that we see coming on. And we were just having a quick conversation before we went live. I come from Illinois, central Illinois, and most people take the standard deduction there because not as many business owners, it's just easier to take the standard deduction. But here where we're sitting in Florida, and Chris, you were saying, where you're from, the New England area, it's a lot different. So a lot of people itemize instead, right? So they need to know what to look for in addition to the traditional W-2 and 1099 and all of that stuff. So Chris, tell us what should we keep our eyes out for? If something comes in the mail that looks like junk but isn't, what is it?
yes. So, there's a few things that are going to be coming in the mail, or already came in the mail, I should say, now that we're in February. And one is your 1098 form. So this is your mortgage interest statement. So one of the things that you get to write off is your mortgage interest. So for example, you may have been paying rent of $2,500 a month, right, for the last year, which, is somewhere around $30,000 that you paid in to your rent, and you get nothing back for that. In this case, now you have the opportunity to get your interest that you pay in. So to be able to write off that interest off of your taxable income. So what the bank will send you is this form, the 1098 form, that you can take, and when you bring it to your tax preparer, bring that with them, because now you get the opportunity to write off that interest on that loan. So that's a big deal for most people. Sometimes there's HELOCs on your home equity lines of credit that you can also possibly write off. Now, let me make a disclosure now to you guys. I've been doing this a long time, so I do know some of this stuff, but I am not I'm not a certified public accountant. I'm not a CPA. I don't prepare taxes or anything, but this is all public information that you can go look on. But we want to bring it to you first, so you don't have to do your homework or due diligence, or go to the accountant and then say, hey, you're missing this, you're missing that. So if you're watching or if you're listening, here's a great time to get a notepad or get your iPhone and go to your notes section and say, okay, I'm about to go see my accountant in the next couple of weeks. What are the forms that I need to get? And put this one at the top of your list, since you're a homeowner now, is the 1098 mortgage interest statement. That's going to be your first one. Your second one is you're going to want to get your closing statement. So we call it a closing disclosure. When you bought the house, you had to sign off on this closing disclosure, which broke down any points that you may have paid off or anything that. So for each point, which costs 1% of your mortgage, you can get about quarter% back of that. So you want to look at what those charges are, because that's a one-time thing, right? You close on your mortgage this year on your purchase side. Take advantage of that write-off. So you want to bring that closing statement with you to your accountant as well, so you can get that if it costs you an average of 2 or 3 points on the base of the loan, that's a big chunk of money when you get to write 0.25% of that off based
And
on
then those are for people who bought in 2022, right? So it's a one time you write off those points when you bought it.
you
Not
bought it.
people who bought a couple of years ago.
Yep, exactly.
Good clarification.
So the next thing is what you want to do is now think about it already. So the first year you have the mortgage interest you get to write off, so you're going to get some extra money back. You have the closing costs that you paid in. There's a portion of that you get to write off and take advantage of. And then there's also your property tax statement. So you're going to pay property taxes, and there's a pretty big amount. So that should be noted on the 1098 form that you get, but there's a chance it might not be. So what you want to do is bring your town or city tax bill that you get in the mail quarterly and bring that one, because it will show you exactly and outline what you're paying a year on
And
that.
this is a good note for typically if you escrow, it'll likely show up on that 1098 form. But there's some people who don't escrow. They choose to make payments throughout the year, or maybe someone who paid off their mortgage. And so obviously you don't have the option to escrow anymore, right? You're just paying the tax collector directly. Those are instances where you will probably have to seek out that property tax statement.
Yep, exactly. So this one is a little tricky. So typically home improvement expenses are not tax deductible, but there are some cases where they are. So you probably would want to bring those in just to see. So for example, if there was anything medically related, such as putting in a wheelchair ramp or something that had to do with a medical reason, then you can bring in that documentation as well. Or even sometimes there's some write-offs like with solar panels, because there's energy efficiency. So they give, on a federal level and maybe even a state level. In some states, you get big deduction and credits for putting on solar panels. So these are the things that you want to think about, because these are additional money you're going to put back in your pocket. So many advantages to buying a home versus renting. So
not only are things to think about, like this upcoming year, if you don't have solar panels and you've been thinking about it, well, heads up, there could be a deduction for you come next year. So
that's it. So, keep these things in mind, and I always recommend people keep, most of us, I'm in the middle. I have a filing cabinet, but I also have folders on my desktop, probably like most of you out there. So either keep these documents, or like I do in most cases, I keep them in both. I like to have a hard copy that I keep in a drawer, which just stacks paperwork up, all over the place, or I put them on a folder. So keep a folder readily available all year round of things like this, especially if you go to buy another home. You have your income statements in this folder or in this drawer, this cabinet. You have your 1098 form when you get it. You have these receipts for home improvement. You have all the stuff in one place and organized. So when that time comes, you just go for it. You grab it and you go. So there's other things that, the other nice things that there's other deductions that you can take advantage of that you can't when you're renting. So charitable contributions, for example, as a homeowner, you can now deduct your charitable contributions, your tax preparation. So prior to buying the home, you would go to H&R Block or whoever, XYZ CPA, and you pay that expense of $100, $150, in some cases much more. There was no tax deduction for that, but now there will be. So again, whoever you use, they'll be able to, maybe just mention, okay, will I be able to write off this preparation bill that you're doing? And they'll be like, absolutely. And they might say, do you want to pay more so you have a bigger deduction? No, don't let them do that. I'm being sarcastic with that. But those are the things. And there's other things that you can also, there's other things that can come into play when you're doing this. So that's going to be something you're going to want to ask your tax preparer at the time. What other things can I get?
Yeah. Hey, Chris, can you tell us, so if someone has multiple properties, or maybe they have a HELOC, home equity line of credit on top of their mortgage, are these all separate? Like you buy a second property because maybe you want a second home, or maybe you want to rent it out or something like that. Are there tax savings potentially on those properties as well?
Yes, there definitely is. So like for example, second homes, you definitely have the opportunity to write off that interest as well. There are some different scenarios and caveats, so you want to make sure that you review that with your tax preparer. But again, if you have a second home, even if you have an investment property, I encourage you to take those 1098s that you're going to get from them into your tax preparer, because you're going to have multiple write-offs, especially with investment properties, because in a sense, it's a business, right? It's an investment property that generates you income. Hopefully doesn't lose you income, but you can then take advantage of whatever you can write off, which one would be that mortgage insurance, property tax bill, stuff like that you can write off as part of the money that you're coming in. Even when we look at rental properties, we only use and factor 75% of the rental income as income. So it's good to be able to take some of that advantage to, leverage those write-offs when it comes down, because you're only getting counted for 75% of it as income anyways.
So that's another thing, for people looking ahead this year. If they only have their house and they're thinking of stepping their toes into the investment side, or getting multiple properties, or that lake property that they wanted, that could potentially be another advantage for them to explore, another incentive to go ahead and move forward with purchasing another property.
Yep. And then, if you look at even a home equity line, you have to look at what you're doing with that money. So one thing you want to think about is, okay, if I had to take money from my home equity line because I'm buying my second home, or I took out because I'm moving up, I'm going to use this home for an investment property. Now it's a down payment that could possibly be used as your write-off. And now if you're just taking out money out of your home equity to pay off some credit cards, and, maybe you're going to buy a car, that's not going to be tax deductible. So it's going to be specific on how you use that money. But if you're using it, there could be new ways too. I mean, but as far as using that money to buy other properties, and you're doing something with that to do some substantially improve your home, in some of those cases, you can actually have that be write off. But I think it's really important for everyone to realize that there's a bucket of money every year that, you can get back by just home ownership. And I don't think enough people understand that, because when you look at it from the perspective of paying rent for a year versus your payment maybe being even less buying a home, or even if it's a little bit more, it almost weighs out in your benefit at the end of the day with the write-offs. I mean, it just makes a heck of a lot more sense, and it opens up additional tax exemptions. So it's definitely something that's important to talk about. It's important for you to know as a realtor, to maybe even encourage when you're talking to your home buyers, that there's a lot of opportunities that will benefit you as being a homeowner, more than just being able to hang up the pictures you want on the wall, being able to paint the walls the colors you want to paint them, and just the simple things that people overlook on home ownership, that is just increases your quality of life, in a sense, that it's important for people to kind of realize that it's not just those things, but there's also some financial benefits in it as well.
Well, and if you're renting, all you're doing is you're giving a tax write-off to someone else.
Yeah, and you're paying their mortgage, right? So you're giving them money one way, and they're getting the deductions back, and they're able to use these other, I guess, inroads to tax exemptions that you wouldn't have as a renter. Again, just charitable contributions, medical expenses. These are big things that, people have on a year-to-year basis, that why not have the opportunity to get some of that money back?
Well, this is a good time to remind, this is for all of our Florida friends, that if you bought a home this past year in 2022, don't forget that the deadline to file that homestead exemption is coming up in March. So be sure to head down to, I think it's the county tax collector's office, and get that filed.
That may be a good thing for us to talk about. That might be a good one for us to talk about in the next coming weeks, to remind people.
That's a good idea. We do have a blog up on mortgagedreams.com with information on how to file that homestead exemption. So Chris, for our audience, I'll link that blog and connect it to this video so that people can find that resource.
And as always, whether you're one of our referral partners, one of our clients, or one of our potential clients that are listening in, feel free to message us. Go to the site, find my email, follow me on all the different social networks. I mean, I'm on all of them. TikTok even. I mean, believe it or not, I've been in the business a long time and I do TikTok. So I try to do some TikTok videos. We got Facebook, we have LinkedIn, we have Twitter. Whatever, I guess, channel is best for you. If you want to message me any kind of questions anytime, I'll definitely would love to take the time to answer any additional questions that you may have.
Yeah. Well, Chris, thank you so much for taking the time today and sharing with us some knowledge on this. As a reminder for everyone, information on this topic will also be linked in this video. We do have a blog post up right now, and this is a hot topic because we are already getting a lot of clicks on that blog for the property tax info. You can always find this video on YouTube, and you can also find it on your favorite podcast platform if you prefer to listen in rather than watching. So all those resources will, of course, link for everyone to access.
Follow us.
And follow us. That's right. Like and subscribe on the YouTube and also on the podcast. That help get this good information out to other people who may be searching for it as well.
Well, thanks, Mindy. Thanks for jumping on here with us and with me. And thank you all for watching, and look forward to talking with you guys all soon.
Yes. Thank you, Chris. Everyone have a wonderful rest of your week.
All right. Bye. Bye, Mindy.
Goodbye.